touch base with our next guest, Sunil Subramaniam, who's CEO of Sundaram Mutual Fund, joins in with his take on the markets. Sunil, it's great to have you on the show. Thanks very much for taking out the time. You know, it's again the same question. How are you really mapping the trends on earnings? Because it's a rolling cycle, right? And now the expectation is that FY19 earnings will finally rise.
Well, if you want me to categorize the current state of the market, I would call it as political uncertainty combined with economic certainty. So what I mean is that both globally and domestically, you're seeing the economic footprints. The monsoon outlook is good. The IIP inflation was reasonable. With the monsoon, inflation should be still under control. Then you have the basically the IIP numbers and the demand numbers coming in strongly. Same way internationally also, it's a very similar situation. There's political uncertainty around Syria, US versus Russia, US versus China, US versus Korea. But economic footprint, both in America and Europe and Japan, are all looking extremely positive and strong. So from a perspective of the portfolio, right, the earnings season, this economic certainty will lead to a robust earnings season. We believe that 17 to 18% are on the large caps, 20 to 22% on mid caps, and about 23 to 25 on the smaller and micro caps is what we think are going to be playing out this year. And that will, in terms of the portfolio allocation, the earnings season is also important for us as we look for the guidance for the current year. The year gone by is not so relevant. Maybe the last quarter, those results for the last quarter are relevant because they'll probably be the first quarter for many companies which is totally devoid of a GST and a demonetization impact. So interest will be there in the last quarter earnings to see how they have coped, and the guidance they are giving for the current year will help us reallocate portfolios. And that being said, the big major event is the Karnataka elections. So I think towards the end of May, we'll get a lot more clarity basis the results on the political side.
Yeah, but you know, how much would you give to the market direction and the market range in the wake of that political uncertainty?
So I would say that plus or minus 500 points on the Nifty is probably the range that we will see in the shorter duration in the next 3 to 6 months.
How do you, because you know, reports have already started coming in, it's same time next year we would be in the thick of action, talking only elections all the way, and reports have started coming in on how that's turning out to be a headwind. My question then to you is, what is the scenario that can derail the markets? Right now, the possibilities working in market circles is, you know, Modi comes back with a majority, BJP comes back, but with 210, 215 odd seats, may need a coalition, who then becomes the Prime Minister. Or, of course, the third scenario is the one that nobody wants to talk about just as yet because it's not pretty much on the fore. But, you know, a change of government, so to speak. How do you look at those scenarios working in with, you know, your own call on how the market would behave?
And there's a fourth scenario which you have not mentioned, which is an advancement of the elections to November this year, which I think is a real situation the government is evaluating from what we hear.
Side talks, rumor mills active in the markets, right? So since there's nothing official about it, but since you've mentioned it, yeah, go ahead with that scenario too.
Yeah, so the point is like this. So the scenario for us of, let me address the scenario I brought up first. An early election scenario would be very positive because it indicates a confidence on the Modi government that they can actually win through and carry forward a majority. Because remember that regardless of whichever scenario operates, the government is going to have a Rajya Sabha majority same time next year, thanks to that 2-year rotation policy. They have a lot of states in their control now. So, right? The other three issues which you said, Modi coming back to power, it's a slam dunk, so it's not an issue. One is a coalition and one is a non-BJP government in power. So the point is, yes, the market will be sensitive and will react to it. But from a perspective of a portfolio, the earnings season, I don't think it's going to have any impact on the earnings season. Second, portfolio perspective, those two scenarios of Mr. Modi not coming back to power with a resounding majority or a comfortable majority would mean that portfolios would be tending to the short term as opposed to the long term. Why I'm saying this is, in the short term, the populism which will come in, right? If even Mr. Modi, there will be exit polls which will come, not exit polls, pre-election polls, right? Which come in, and the indication on the ground, if it's not very strong, you will see the government switch from its infrastructure, road building and all those focus to maybe a more populist approach, increasing Narega, increasing food subsidy, fertilizer subsidy and all of that. So what that would mean, it will give a short-term pop to the consumption sector, to the rural sector, and normally this happens in every election year. So the short-term consumption numbers will look very robust and strong, and so as a fund manager, we would allocate a greater proportion of a portfolio to the short term. If the scenario is looking good from Mr. Modi coming back to power, then we would expect a renewed thrust on infrastructure, on affordable housing and road laying and all of those long-term things which are going to generate. So then our portfolio would automatically tilt towards an infra, building materials, capital goods, those kind of portfolio. So very highly polarized portfolios is what we see happening based on how these outcomes look to be panning out based on the news flows.
Sunil, what though are you expecting from the earnings season? Any outliers or any dark horses which could surprise in the upside?
See, earnings for us, we moved on FMCG, we moved from underweight to neutral because earlier we were a little bit thinking the valuations were expecting an earnings growth which was not looking justified, say 3 months ago. But today we think that the actual FMCG numbers are going to come out fairly strong and robust. So we have changed our stance there. So that's, I think that's something going to surprise on the upside in terms of the FMCG. That's what we expect to be the outperformer in this particular earnings season.
What within FMCG? Is it more the urban related theme or more the rural focus plays that you find attractive at the current valuations?
Okay, two things there. The earnings season, we expect the earnings in the urban related to be strong, but from a valuations and future earnings growth perspective, it's the rural which will drive. So the past is going to be urban. The quarterly results, we expect the earnings from the urban to be surprising positively on the upside. But our call in terms of the portfolio allocation is more driven by the rural, consumption story for the next 6 to 9 months.
Can we finally bank on banks to say this is it and no more on the bad loan mess, or at least give us a timeline on how bad things can get before they get better?
Well, a tough question to answer on how. See, the point is that barring any surprises, we think that the worst of the NPA general recognition is behind us. Okay, so except for some surprise, because if you see a lot of the NPAs which are economic cycle driven, we believe will turn around and will post better numbers. So banks may even be writing back some provisions they've made back in the past. Right, but barring any one-off out of the black swan surprises coming, we think the worst is behind us. But at the same time, right, the NPA issue is not just about reporting; it's also about recognition and what you're going to do with what's already recognized. And we think that RBI, it's high time RBI comes in and sets up the mechanism for the public sector banking thing to get more robust, to maybe do some mergers to get a few big solid banks in play, and also maybe pull out the toxic assets into a bad bank, so to speak, so that can then, vulture investors and those who like to take these turnaround bets can then participate and take them out of the regular banking cycle. And we believe this will happen because economic recovery cannot happen without the banking system supporting it. So it is of paramount importance, and that's why we believe, and you're also hearing news that RBI is trying to relax the norms so that banks also get a little more leeway in terms of this.
Right, that would be the case. One final word, Sunil, do you think that, come the summer months ahead of the monsoons, that we could be higher, talking record highs once again for the markets, given that we've covered lost ground?
See, if the Karnataka result goes well, then absolutely new highs are on the cards.
Okay, thanks very much. Thanks very much for your time and your insights. Really appreciate your views.